Amazon stock is heading to a new 52-week low after reporting earnings that clearly missed the mark in terms of its expectations with investors. We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. We're wrapping up FANG earnings week when we talk about Amazon.com, ticker symbol AMZN. The company's shares are falling by about 9% in the after hours. That's on the heels, though, of going up over 4.5% during the regular trade. So over the last 24 hours or so, stock's off by about 5%. But year to date, the stock's actually down quite a bit, down 15%, down to south of a $1.5 trillion valuation. We'll keep that in mind as we walk through these earnings. We'll take a look at the revenues, the profits. We'll take a look at the guidance as well. I think that's what's having the stock move lower. We'll take a look at where Wall Street has expectations on that sales side over at Amazon. We'll look at a valuation metric from price to sales, see if there's some bottoming there. We'll take a look at the global economy as well. Here in the United States, GDP fell negative, so we have to keep that in mind when we look at the sales expectations for Amazon, considering if GDP is negative, well, guess what? You're probably headed towards a recession. That may not be good for Amazon shares. Take a look at the revenues, the profits, the cash flows over at Amazon, or the negative cash flows that this company is operating with. We'll take a look at the different business segments, and then we got to look at this from a technical perspective. It's broken through a key area of support, which we've talked about for years now here on the channel. This $2,700 level is breached. The stock is now south of about $2,700, closer to $2,620 in the after hours. Now, revenue came in the most recent quarter at $116 billion. That was 7.3% year-over-year growth. When you looked at analysts' expectations, they were basically right there, right at about 7% year-over-year growth. Now, where I think Amazon is seeing the declines in their share price is based on this second quarter guidance. Revenue is expected to come in between 116 and 121. The street was expecting closer to $125 billion. So they're coming underneath that. And in fact, their low end of the guidance is below where the low end of the consensus was from the analyst. This also represents just south of 10% growth, or between 3 and 7, depending on where they fall in this revenue expectations between 116 and 121 in the upcoming quarter. Again, I talked about how they have 116 in the most recent quarter. And again, analysts were expecting 125 in the upcoming quarter. Now, I think what a lot of people are going to start thinking about too is Q3. Now, you do have Prime Day, it appears, falling in Q3, and analysts are projecting closer to $133 billion in sales for Amazon in the Q3. That would represent 20% year-over-year growth. Are we going to be able to go from 116 to 120 up to 130 in a quarter for Amazon, even with Prime Day? Could be rather aggressive. And again, I talked about how GDP fell unexpectedly negative in the most recent read. That means we're another negative quarter away being officially in a recession here in the United States, and we'll see how that materializes. Certainly wouldn't necessarily benefit Amazon from a sales perspective. Now, speaking of sales, over at Amazon, I pulled up a price to sales chart. It's probably one of the ways you can analyze Amazon. You could probably pull up price to cash flows as well, but I pulled up price to sales because we are seeing a pretty low multiple on these sales, a low growth rate at just 7% in the most recent quarter, projected to be 7% on the high end in the upcoming quarter. I think the revenue estimates for the upcoming quarters will come down. I don't think we're going to grow 20%, especially when you have negative GDP here in the United States. So right now, investors aren't paying historically a big multiple on sales for Amazon, currently sitting south of 3 times sales. We have a 10-year chart of Amazon, and yes, 7 or 8 years ago, the stock actually traded pretty routinely under 3 times sales. It wasn't more recently where it's kind of spiked up above that, but buyers have stepped in at this 3 times sales. It mirrors essentially the price chart as well, where buyers have stepped in at this $2,800 to $2,600 level with Amazon pretty consistently. But again, we're seeing that breached in the after hours. This is on the heels of these Q1 numbers, which again came in at $116 billion. That was up just about $8 billion over the previous period on a quarterly basis, from 108 up to 116. Again, these are in millions, so this is $108 billion last quarter, all the way up to $116 billion worth of revenue. Again, this is not for a full year. It's not for a lifetime of the company. This is for 3 months. Still very incredible and impressive revenue numbers. In fact, you don't see this anywhere, quite frankly, in Wall Street. Now, what you also don't see is how these operating expenses are actually growing at a faster clip. You went from $99 billion up to $112, so that's over $12 billion jump on those operating expenses. I told you we had an $8 billion jump on our revenues, a $12 billion jump on our operating expenses. And yeah, that's going to make your operating income shrivel up from 8.8 down to 3.7. That is not good, in my opinion. That is the biggest reason also why the shares are trading off in the after hours. Not something that you want to see as an investor. Now, if you walk all the way down to the bottom line of the net income, you see that they have this big, gigantic other income, or in this case, an expense of $8.5 billion. This is mainly tied to the fact that their Rivian investment has also shriveled up over the last several quarters. As we've documented here on the channel, that's one of the worst companies, quite frankly, that I could see, and maybe one of the most overvalued stocks that I had ever seen come onto Wall Street. Perfect timing for them in terms of the company raising money, but certainly didn't benefit Amazon in the most recent quarter, as they had to write down that investment by over $8 billion. So that really impacted your net income number. So the net income number is a disaster, but a lot of that has to do with that Rivian investment. Really, what's even a bigger disaster is the fact that you have your operating income shriveling up. Inflation is really taking its toll on Amazon. They're not seeing a benefit for higher sales, unlike Tesla, unlike some other companies that we've looked at that have turned inflation into higher sales. And it's really hurting them on the expense side. Obviously, on the labor side, the fulfillment side, the gasoline side, all of that is taking its toll as the operating expenses far exceeded the growth rate that we saw on that revenue side. That is not good if you're looking to invest in Amazon, at least in the shorter term. You see here for our net sales in North America, those have turned negative. In terms of our operating profits, you had $69 billion worth of net sales here in North America and $70.8 billion in cost, so you lost money there. International, same type of story. You had $28 billion in sales, which actually represent a decline in net sales internationally. You went from 30.6 down to 28, and you lost $1.2 billion. That is like a triple whammy. So you're losing market share and you're losing money at the same time in a business model that was just marginally profitable before that. That is not good as well. And it goes back to the same old bull case argument, or sometimes the bear case argument with Amazon, is the whole value of the company is tied up into this AWS, especially when you're talking about profits with this company. When it came to AWS, they had a pretty good quarter. I'll show you that the growth rate's not fantastic over at AWS. I think if it was better, people would be a little bit more excited and more upbeat about the stock. I'll show you that in a second. But net sales came in at $18.4 billion. They had just $12 billion in operating costs. So here's your operating income of $6.5 billion. So the traditional Amazon.com business is losing money. AWS is printing money. It's pretty much the same story as we've always seen over at Amazon. Now, from a cash position, the company saw some cash leave the building in the most recent quarter. I'll zoom up to cash flows here in a second and show that to you. But all things being considered, they still have plenty of cash over at Amazon. They have a fair amount of long-term debt, but this is a company that really should operate with a lot of debt, and they certainly do that. And it's not really a concern in the shorter term, in my opinion. Now, from a cash flow perspective, our second column is our most recent quarter. We talked about how we had negative net income. We do get to add things back in like that Rivian investment, but even when you do that, it paints a terrible story for Amazon. They've turned cash flow negative in the most recent quarter. Last year, on a quarterly basis, they had positive cash flows of $4.2 billion. This year, $2.7 billion, but that is actually a negative $2.8 billion on that cash flow side. That's a complete disaster, and it's showing you that the inflationary environment that we're in right now does not, I repeat, does not benefit Amazon one bit. In fact, it's hurting this company tremendously. We see for the last 12 months, you went from $67 billion in positive cash flow all the way down to $40 billion in positive cash flow. In the most recent quarter, they spent nearly $15 billion on property, plant, and equipment. very capital intensive company. They took on some short-term debt, repaid a portion of some, but all things being considered, the cash generated by this company is now negative for the most recent quarter. That's why you saw the cash balance over the last year go from 42 billion down to 36 billion in the most current period for Amazon. Now, in terms of the growth rate we're seeing across all of their different business segments, the online stores segment declined 1%. Physical stores are getting back, and this is actually a bright spot for the company. The Whole Foods and their Amazon kind of fresh and go stores, those were up 16%. Third-party sellers, including myself, are struggling a little bit. You're seeing just 9% year-over-year growth when the growth was far bigger than that in previous periods. Subscription services up 13%, but again, a slowing growth rate. Advertising up 25%, which is fantastic, which is about where we've seen other companies in the online advertising space kind of guide to and grow. But again, it's a slowdown for Amazon, which was having a far higher growth rate there. And AWS screeched to a halt to a certain degree, down to 37% growth rate. It was 40% last quarter, but we're getting to more a normalized environment when it comes to the AWS growth rate. We'll see if they're going to be able to re-accelerate that back up to 40%. But look, 37% is towards the high end of the growth rate that company's business unit has achieved over the last year or so. Probably the one segment of the business that is still firing on all cylinders. Now, from a technical perspective, Amazon is completely broken down. It's broke through this area at 27.15, which is represented by this green line here. The stock has bounced off it several times. We had our sideways consolidation moved up a little bit with Amazon, up here to closer about $2,900 for nearly 2 years. The stock traded in that range from $2,900 up to about $3,500. More recently, it's broken through that $2,900, but found support down here at $27.50, and we're seeing in the after hours now the stock is actually trading down here closer to $2,600 per share. That is a new 52-week low for Amazon, and quite frankly a nearly almost a new 2-year low for the stock price. That takes the valuation well under $1.5 trillion. I don't think we can make the argument quite yet that the AWS business is worth $1.5 trillion on its own, considering the business unit had about $18 billion worth of net sales in the most recent quarter. Sure, you could annualize that out, maybe give them credit for a nice growing quarter in the upcoming ones, and you get to about $80 billion on that top line, maybe close to $30 billion on that bottom line. While it's probably not worth over $1 trillion on its own, it's worth hundreds and hundreds of billions of dollars. So if you believe in the longer term that the Amazon.com business will eventually start to turn profits, again, that's the argument that Amazon has made for really the lifetime of the company, is that the Amazon.com business will eventually start printing cash flows and positive cash at some point. Well, obviously you're getting this stock at a tremendous discount because you might be paying a premium for the AWS profits and revenues, and your icing on the cake is eventual international and North America sales really coming in strong, and the profits eventually coming in strong for Amazon in that case. Right now, from a technical perspective, really wouldn't be super excited about Amazon. Your downside is, I wouldn't say unlimited, but it's big, okay? You've got downside, I think, really, quite frankly, there's not a clear area of support until you get to about $2,000 per share. That's over $600 lower than where the stock is trading right now. Your upside, quite frankly, is now overhead resistance back up here at about $27.50. That's just $150 over the stock. Quite frankly, if you're long Amazon like I am, you continue to hold your shares. You have a longer kind of 10, 15, even 20-year view on this company. You believe that at some point, the Amazon.com business will start firing in all cylinders. The inflationary environment will wrap up a little bit. Amazon will be able to expand sales and expand margins in the future. But right now, you're going to go through a rough patch with Amazon. I don't believe any of these revenue estimates for the upcoming quarter. Sure, the Q3 will be much better than Q2 because you'll have Prime Day, but will we grow 20% to $133 billion worth of sales after really guiding down in the upcoming quarter? If these GDP figures are any prediction, we are almost assuredly heading into a recession, likely by the time you get to Q3. And if you still have $6 gas, you still have high inflation, and you have rising interest interest rates, I don't think that's going to be a great recipe for people buying a bunch of stuff online that they don't really need, which Amazon, quite frankly, kind of relies on. I'm certainly not going to sell my Amazon shares. And in fact, if you get some kind of deep pullback from a technical perspective, there's are areas much lower that I'd like to buy this stock, especially as the valuation starts to walk in. And you could start making the argument that the entire business of AWS alone could be worth the market cap. That is not where we are today, but Amazon certainly disappointed, and the stock is reacting appropriately, in my opinion. Hopefully, you guys enjoyed today's video. Lots more from the earnings front coming later today, including Apple. Hopefully, you guys have a great day today. Good luck with your investments.